Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, May 10th, 5:20 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Market state, we're in an uptrend led by large caps. Small and mid caps continue to lag, primarily because of being dragged down by the regional bank uh, lack of confidence spreading across that sector, permeating into mid and small caps. We've been saying to avoid those for a while, as well as commercial real estate. Let's check the trend gauge over here. Market leaders continue to uh, neutral to bullish, making some progress on buys. We'll go over that when we cover the portfolio in the tail of the tape. Now, as far as the three time frames that we track the five major indexes, the short-term 21-day moving average, the medium-term 50-day moving average, the long-term 200-day moving average, all three of the big cap indexes, the S&P, the Nasdaq 100, and the Dow Jones, are above those respective moving averages. Mid caps and small caps below, trying to make an attempt, failed into the 21-day. Today, the declining 21-day, getting above that would be certainly a feather in the cap of the bulls, show some confidence for a continued uptrend. So today, what happened today? Man, what a day today was. If you look at the numbers, you'd think, oh, CPI, good, numbers okay. There were traps galore to be laid by the market today. They trapped bulls on the upside with the gap up on CPI, failed all the way down to from a plus 0.75% to the upside, to down 0.5% on the S&P on the downside. Failed breakdown trapped the bears, and then recovered most of the open. Uh, Only the Dow ended up negative on the day because of some weakness in some of the stocks at the top of the Dow. Probably a better indication of the day is what the S&P did. Here are the numbers on the day. The RG7, this is our 7 growth ETF composite, up 0.6%. S&P gapped up 0.7, climbed a little bit higher, but topped within the first 15 minutes, started selling off, and then 3 legs down. Got everybody that got bullish at the beginning bearish, failed breakdown below 4,100, recovered, ended up on the day 0.45%. You can see the roller coaster when we bring up the intraday charts. Nasdaq 100 led on the day. It gapped up 0.8, ended up higher than where it gapped. Strength continued to come into big cap tech. Google did a demonstration on how they're integrating AI chat with their search using NVIDIA chips, and Google up over 4% on the day. Just continued strength by these big cap techs taking the lead on AI technology. Dow, as I said, down 0.1%. Mid caps up 0.2. Russell 2000 up 0.6, despite KRE and banks gapping up along with the entire market at the open, selling off badly, but recovering somewhat by the close. The index recovered by the close. KRE still ended up down 1%. We'll look at that also. Global 60/40 bonds were strong today as interest rates dropped, as the CPI uh, came in 0.1% below what was forecast. That's what triggered the initial rally. I would love to see the shenanigans behind the scenes at those hundredths of a percent that they're doing to get it to be round down to 4.9 instead of round up by 5.0. I'll bet that's quite the spectacle. So anyway, Global 60/40 up 0.34. In-house GROTECTION dragged down by a little bit of a whipsaw on the S&P 500, and also by ONON and Lulu, two of our top holdings, finishing red on the day. We managed to finish positive 0.11. Let's get right into it. We'll start off with the S&P 500, and first I'm going to show the chart that you should be well aware of. This is why we are active managers at Revere. We track leading stocks. We track the major indexes across 3 time frames. Our goal is to participate in a market uptrend, get out of the way in a severe downtrend. The severe downtrends, these highlighted uh, numbers here, all occur beneath the 200-day moving average. Last year didn't quite hit the severe threshold, which we're using 30% for, but still down 27.5%. We were down less than half of that. Slow on the recovery this year. That's typical. Uh, Coming off the bottom, getting into the market, dealing with some of the shakeouts. Uh, but net, you combine our savings last year with this year, we're handily beating 60/40. So S&P 500 doesn't look like much on the day, but it was an undercut and reclaim of the 200-day moving average. Let's go to the 5-minute chart. So we gapped up, followed through to the upside. We added to SSO here, looking for a breakout. Let's go to a 60-minute chart, or at least a shot, an attempt at 4,200. That reversed. You can see the choppiness even on the 60-minute chart. So back to the 5-minute chart, that reversed, went up higher, second leg down, undercut yesterday's lows. Is that a false breakdown there? And we're all clear to the upside, rallied up to 41.34, and then the third leg down, which was brutal. And we got shaken out of some of our S&P 500 long here as we broke below 4110 is the 21-day moving average right around here. When we reclaimed it, back tested, and made a higher high, we added back to our S&P long. So net, a little bit longer on the S&P than we came in during the day. The two adds ended up being flat. We did lose about 0.1% on the shakeout below the second failed breakdown, the one below the 21 EMA. You can see we bounced first at the 21 EMA before breaking it and then reclaiming it. It wasn't just a little brief undercut. It was good, almost 20 points, 15 points breaking down. But then nice bounce and pullback, a little bit of a pullback into the close. So net, we have closed at 41.38 for basically 3 of the last 4 sessions after the Apple-induced gap up and rally last Friday. So hanging around right at the 21, undercutting, reclaiming it, testing it. It's holding 41.55. You'll see this when we get to the tail of the tape is a resistance level. That's where we topped today. That's a key fib level. Let's go to the NASDAQ 100. Strong for the last 2 weeks here after being weak for 4 weeks. Led by gaps up on earnings from several of the big cap tech stocks and making a new recovery high off the bottom. Next up is challenging the highs from August. We'll see how that works. Let's go to the 5-minute chart on this. You can see the gap up, choppy as well. In fact, turned negative, went from up over 1% to negative, and then strong rally in the afternoon. This is while Google was primarily doing their presentation. And then it hit the wires. People saw Google rallying, added into it. A little bit of a Google pullback into the close, but new closing highs on the NASDAQ 100. Dow Jones Industrial Average undercut, but closed right on the 21-day wide range. Undercut and reclaimed the 50-day moving average last week. Can't seem to get back above this 34,000 level. That's acting as strong resistance. Midcaps MDY is the ETF. Got above the 21, ran into the 200 and the 50, and failed again. Recall back in December when we kept trying to get through the 200-day moving average and this 450 level. Clearly broke through it up to 500, sold off, and now lagging in the sell-off. This was the meat of the initial sell-off for regional banks. Regional banks actually look worse than mid caps do here. They've been outperforming regional banks, both mid caps and small caps, but you can see the failure again into that 450 level. A clear break above today's high would be very bullish. Let's go to small caps IWM. ran in, got above the 21-day moving average again, failed, closed just below it. Right above there is the declining 50-day moving average. Let's compare those charts to KRE, which continues to plumb the lows. Maybe a shakeout here last Wednesday, maybe not. Every time it runs into the declining 80 MA, it sells off, as well as XLF. We got out of our financial short on the gap up. That turned out to be a bull trap. It hit the 21 and reversed. Uh, would have been better off to stay in it. May get another chance to get into it, but I'm thinking we want to switch to BNKB, which is sorry, BNKB, which doesn't have. Uh, okay, what is it? It's BNKD. BNKD. Thank you. Banks down, BNKD does not have the Berkshire Hathaway factor that XLF does, and it has three of the really poor acting regional banks in the top 10. Um, this looks like it would be a better way to play it if this is going to continue. So we will be keeping an eye on that. So we looked at the three major indexes. We looked at XLF. We looked at KRE. Let's look at the dollar. With the strength in CPI, I should say the weakness in CPI, the strength of the market, the dollar gap down. Here's a 5-minute chart. Didn't reclaim uh, the losses and ended up down on the day 0.18, back below this 21-day moving average, which has now flattened out and it's playing ping pong. The next directional move on the dollar could be key to what's going on with the overall indexes. Now, gold and silver stocks today, despite dollar weakness, did not really have that good of a day. Gold bounced off the ADMA, finished barely negative. Gold stocks, however, lagged big time today. They didn't gap down. Well, let's look at the 5-minute chart. They were okay early, open flat, big sell off early, recovered into the close along with the market, but weaker than gold. Certainly over the last 4 or 5 sessions, gold has been leading gold stocks, and silver SLV um, down on the day also. So weak dollar didn't benefit the precious metals today again. Let's go to the VIX. VIX down again. Did briefly get back above the 21 during the panic, but then a big sell-off into the close as the market was rallying. A little bit of a wider range today on the VIX as well as on the indexes. Let's flip to bonds now. Broad bond index BND up on the day, reclaiming. So this is reclaiming a gap up. So this is leaving the gap down. So I'm having a hard time talking today. This filled the gap of the last 2 days on the bond index. Let's go to a 5-minute chart or maybe a 15-minute chart so you can see it. So here's one gap down. Here's a second gap down. Continued. We reclaimed the first gap down. Same thing on TLT. Showed strength today. Didn't quite reclaim that first gap down, but did show strength. Bonds showed strength across the board, but still near the bottom of their range. They've got some overhead resistance to get back to the top of the range. Not sure how this is going to play out, but the reaction of the market today with the weaker CPI was that uh, the central bank, the Fed, doesn't need to be in a hurry to continue jacking rates up because, well, inflation came in weaker than expected. TYX still at the top of its range, but down today 1.3%. TNX, the 10-year, down 2.3%. So bonds selling off. Let's go to Bitcoin, and then I think we've covered them all. Bitcoin ended up flat on the day, but it was pretty volatile. Look at the 5-minute chart here, along with the indexes. I didn't catch this. Bitcoin fell off a cliff again in the afternoon. Didn't see any news. Wasn't really paying attention to it. We just cover Bitcoin because a lot of people worry about it. If we would ever take a position, and it would be like 2%, and it would have to be a very clean chart, which it's not right now. It's just chopping. Okay, I think I did cover everything. Yes. So let's go now to the tail of the tape. You can pause this to read everything. I'll hit the highlights. What was highlighted in green here with CPI, four of the five key numbers, month over month and year over year, came in line. But the headline number, the expectation was for 5%. We got 4.9. That was what everybody was focused on today. And the initial was yields down, dollar down, futures up, gold up. Gold turned around. The dollar rallied a little bit but stayed down. Yields stayed down, but stocks were all over the place. But this was the initial reaction. Day count up to with two consolidation days back above the ADMA for the first day, 4 days above the 21 with the undercut and recovery on the S&P. Didn't even touch the 21 on the Nasdaq 100, which continues to lead. You can see the choppiness, and when you make the high of the day within the first 10 minutes, that's never a good sign. Let's see what was strong today. Semiconductors, software, XLC, XLK, and RE real estate. Uh, we're looking at a way to isolate commercial real estate for short, but haven't quite figured out the best way to do it yet. Still searching. Bond yields down as bond prices were up, the dollar down, oil's down, KRE down, gold and silver stocks down. Portfolio, lots of changes. I talked about, already talked about the changes to the index longs where we trimmed some UPRO, added to SSO. We sold FAS on the gap up, trimmed GDX as it was underperforming early. This had really been outperforming. Should have took some, did some offensive selling. We didn't. We trimmed it a bit. We're still very positive on that trade. Trimmed some Meta and DraftKings as those are the weakest of the holdings as we were selling off. And big move today in Celsius on earnings. We did two buys on that. We've got 2% on that. That's our uh, 10th holding. We won't really go to an 11th unless we trim something. Uh, Normally, we like to keep it capped at 10 individual names, equity holdings. So bottom line for the day, CPI gap up fails to red, recovers most of it. NASDAQ 100 leads for this 4155 level. That's a 50% retrace of the entire 2022 bear market. Continues to be a key level that we can't get any traction above. We got to 4154 today before reversing. So that's a key level to keep an eye on. And then above there, 4190 and 4199 have been pretty stubborn also. And it's Wednesday. That means it's weekly chart Wednesday. We're going to review all of our holdings and all of the 21 over 21 on weekly charts. We already know they're above the 21. Let's see how they look on weekly charts. And this is a thing of beauty. NVIDIA just continues to climb higher, not only in price, but also in relative strength as their AI chips are at the forefront of this AI, what do we call it, revolution that's going on, upgrade to society. It's going to be a downgrade in a lot of people's jobs when it gets fully integrated. Next up, Meta. Meta has paused. Maybe it's just because it was the second earnings gap up. Relative strength has been strong for a while. May just be time for this to cool off. That's why we trimmed a little bit of it today down to a small position. ONON uh, continue this lower trend line above all the bottoms of these weeklies. It's in a very nice channel. A break below that would be clear. We've got earnings next week. One of the videos before then, I'll talk about how I calculate what size position we carry into earnings, but that's provided ONON holds the 21-day going into earnings. It was weak today, as was Lululemon, but you deserve it when you continue to just trudge higher at the top of the base now, so maybe time for a little bit of a handle, although arguably it put the handle in during this 3 weeks tight 4 weeks ago. GDX, inside week so far, still looking okay. DraftKings, uh, just it was basically the weakest of our holdings, and we trimmed half of it today. Nothing wrong with it at all. But we'd like to see, if you look at the daily charts, we'd like to see more progress after the gap up, such as we're seeing with Uber, and we're seeing with Microsoft, and we're seeing with Nvidia. Speaking of Microsoft, so you got the gap up. You can see very clearly on the 2 weeks it continues to go higher. Uber gap up higher this week. This is just acting fantastic. FAZ, so this is the inverse bank. Really, we need to show the XLF chart for this. We're using this as the underlying, and this continues to fail along the declining 50-day moving average. We're out of that now, so I can unhighlight the red flag, as red flags are what we own. Celsius, we added this today with the big earnings gap up on massive volume. 600% average volume, up 20% on the day. Let's go to the weekly chart. This had been showing some nice accumulation going into the earnings report, so the market sniffed that out. Relative strength confirming the price new high. CMG, sorry, I skipped over that. CMG on the weekly chart coming in to basically looking kind of 3 weeks tightish after this nice gap up, acting very well after its earnings gap. AMD, since they announced that partnership with Microsoft, or it was leaked last week, has been really showing some relative strength coming into the top of its base, was rejected at the Livermore 100 level today. Might be time for a little bit of a rest there. GE continues to trudge higher. Lantheus making new highs after bouncing off the 50-day moving average. Wingstop continues looking a little tired. It's in the bottom of this big range after the earnings gap, and maybe time for a base. Mondelez still fine, continuing after its earnings gap up. FedEx actually broke the 21 today. Um, Needs to hold the 50-day moving average. The only one of the 21 over 21 that has broken the 21 this week. Race, Ferrari taking a little bit of a break after its earnings move up. ITB continues to be strong. That's Home Builders ETF. Las Vegas Sands acting great. Not making much progress after trying to break out, however. Intuitive Surgical sideways to up after its earnings report. Shopify continues to show strength. So there's certainly no lack of strength in leading stocks. Here's SMCI after a big move up, just a little blip, not grudgingly giving anything back. And I think that's everything. That's going to wrap it. So you can just see from those charts, uh, big moves up followed by tight action. That's bullish. Um, and acting better than the S&P 500, certainly not acting as well on a overall strength basis, and as far as what's holding up, as the Nasdaq 100, as money continues to flow into these big tech names that are on the forefront of AI. And that's going to wrap it. As always, like to hear from you. The email is don@revereasset.com, or my partner Dan Stewart, dan@revereasset.com, if you'd like to discuss becoming a client, or you can call us at 855 Real Wealth. That's 855-732-5932. Remember, it's not how much you make in the markets, it's how much of that you can keep. And with that, I will wrap up Wednesday, May 10th. We've got PPI before the open tomorrow. We'll see how that hits stocks. And that'll wrap it. This is Don Vandenbord with Revere Asset Management, telling it like it is. Just the facts here. Thanks for listening and have a great day.